We're going to do a brief video on GME Stock. That's GameStop Corporation. We've got a daily chart here with a green 5-day, a red 20-day, and a blue 200-day moving average. Let's just go back a little bit and take a look and see what's going on in the stock. We can see that we made a major high back here in November of 21, and we were in a bear market here all the way through March of 22, rallied and challenged the 200-day moving average here around early April of 22, resumed. We never really did get out of our bear market, even though we got some closes above the 200-day. You can see the 200-day moving average is trending down, and we continued a bear market all the way back down into the third week of May. It doesn't look like we made a new low, and so we've been rallying back up ever since then and challenging the 200-day 1, 2, 3, now 4 times we've challenged the 200-day moving average and put in a reasonable set of closes above it at around the $40 level. Obviously it almost got to 50 here, but around the $40 levels where they consolidated price before they sold it off. And that's what's going on right now. You can see the price has been closed the last 4 or 5 days below the 200-day moving average. We have a 5-day that has crossed over the 200-day, but the 20-day has not crossed over yet. So it's an interesting little piece of technical work going on here. This movement here looks like distribution. So why does a stock rally, distribute just before it gets to the 200-day moving average, and then continue to rally? And this is a really interesting technical question. My best guess is, this is all for entertainment purposes only, my best guess is you had very weak money here. You had weak hands who were getting out at the 200-day moving average because they felt that was a good technical place to get out. This money who were buying through here is probably smart money. These people sold to smart money. Now, I'm throwing these words out there. I don't mean anybody's dumb, but I'm just saying this looked like short-term technical traders who were getting out. This looks like people who have more faith in the stock and who are willing to buy it close to the 200-day moving average. If you're a technical trader, you have to have a lot of courage to buy close to a 200-day moving average. You're usually going to sell it, as you can see here. You can see all through here. They're selling it to 200-day moving average, whereas this distribution became accumulation through here. Now, what went on right through here? It's really simple. We got parabolic. Whenever you see a stock go almost straight up like this, you're going to have people step in and sell it regardless. And so when this stock went from roughly 32 to 47 in a couple of weeks, that's a move you're going to get profit taking, you're going to get people shorting it, and the reason you're going to get them shorting it is because you can end up with a great short move like this one here that ended at the end of May. So this was distribution by weaker hands. This was most likely accumulation by smart money. This was people getting ahead of itself, probably people just piggybacking on these rallies and this close above the 200, and this was people who are wisely saying, hey, this stock's getting ahead of itself and we're going to put it back down. So where does that leave us for the foreseeable little future here in the next month? I think that this stock is, you can't really say this stock's in a bear or a bull market. Technically it's below the 200-day moving average, but we don't have a confirmation with the 20-day. So I would say this stock essentially is trading sideways and oscillating very roughly at around the $34 range. If you'll notice, this high of $47 was did not exceed this $49 high. So from a technical perspective, we're still sideways. All the way from March 22nd all the way through here. You could very seriously argue that this stock is sideways and oscillating around, this level right here. You could put a good argument in for that. So in the short term, I expect that to continue. We'll probably come down maybe and challenge this bottom at 28.34, maybe. But it looks to me like this stock's already losing momentum on the downside and it's probably getting ready to turn back up. So in the short term, I would guess the stock's going to challenge maybe the 29 level. And then rally back up to the 200-day moving average, probably around the 33 level, probably by the second week of September you should see that, and then we'll see what happens. This stock is setting up to rally up above the $50 level. Whether that's going to happen or not, it's totally opinion, all for entertainment purposes only, but it's setting up to give that a shot, and we'll see if it happens. If the 20-day crosses down below the 200 and you get resistance against the 200-day, the stock may go down all the way back down here and test the lows of 19. I doubt that, but it could happen. It looks to me like you're probably going to get a slight test, as I said, around 29, a rally to the 200, and then we're going to have to wait a couple weeks and see what happens. If we get decisive close and support on the 20-day moving average above the 200, then we're probably set for back into bull market territory on the stock and maybe a test of 50. But keep in mind, right now in a sideways range, this stock can go either way. So this is all my opinion and all for entertainment purposes only. We put this on RBAM Research's list to follow, so let's go down and see what it says. The stock right now is trading at $30.25 is the low, $31.87 is the high. So $30.25. Let's go down and take a look. So we put it here, GameStop. We said $30.25. So it is. This is the 1 day, 5 day, and 20 day. So it's gone through our 5 day hold period. It has not reached our 1 day hold period yet, but it's within striking distance of our 1 day hold period today. And basically the way this works, this is a 1 day, a 5 day, and a 20 day hold period. Let's go up the top real quick. These are trading days, and these come out every morning before 7 a.m. Monday through Friday. RBAM Research puts these out for stocks. They're buys only, and the way it works is if you were to buy in this column, buy today, close out worst case at a loss just before close tomorrow. Same thing, buy today, close out worst case at a loss 5 trading days, and this is 20 trading days, close out worst case at a loss 20 trading days. Now, profits, if you get them, you take them as soon as you get them. So if you bought today, take your profits today if you get them. If you bought in the 5 day column, take your profits as soon as you get them, even if that's today. But again, take your profits as soon as you get them. Worst case, close it out according to your holding period, depending on the column you bought in. These are all for entertainment purposes only. You can't rely on them for anything other than entertainment. You have to do your own analysis. But they're great to look at, and you can get them for free, absolutely no cost, and no credit card required at rbamresearch.com. We cover 190 stocks. We cover the major forex pairs, long and short, crypto, BTC, long and short, and the major futures, long and short. Stocks right now are longs only. Everything's free. rbamresearch.com. No credit card required. There's a link in the description below. If you like this video, please click the like button. If you want to subscribe, please do that. If you have a comment to make this video better, please leave it in the comment section below. We'd appreciate it. Love to hear from you. And keep in mind, everything that you hear or see on here, including our entry prices, is for entertainment purposes only. It's all in our own opinion, and you definitely trade at your own risk.